Hello, my name is Brenda Hayward. This video is called The Advantages of Paying Off Your Mortgage Early. Homeowners, there are a few benefits to paying off your mortgage early. Even releasing yourself from the burden of the loan is definitely one of them. My video will include financial long-term burden removed, weigh mortgage against investment, and three, utilization of investments. One, financial long-term burden removed. Homeowners, when you plan to purchase a home, you have never thought about the length of time you are really committing yourself to. Now that you thought about paying off your mortgage for a length of time, now you're considering the idea. Most homeowners in the same position have considered the idea of paying off the mortgage early. However, they think about paying off the mortgage while they are burdened with other outstanding loan balances. Now that they are stressed, they believe paying off the mortgage will be liberating. Let homeowners sleep soundly, knowing a long-term obligation to any mortgage lender no longer exists. Even the other homeowners that have minimum financial worries enjoy the thought of a paid off mortgage as having peace of mind. Number two, weigh mortgage against investment. As homeowners and making a decision on how are you going to spend your money and savings or investing in the future requires planning. Since your mortgage payment is one of the biggest loans that you will ever take out and pay for over a period of time, the thoughts of the interest paid flow through your mind and how the money could be put elsewhere, like towards investments. Paying off the mortgage early can allow for additional funds to be added to your 401k or IRA investments. Investments are really not helpful unless they deliver a rate of return that is better than your mortgage rate. Otherwise, if you have extra funds, just put the extra funds towards paying off the mortgage. Homeowners, if you have already paid off the mortgage, you do not need to weigh your investments against your home loan because the home loan is paid off. If you decide to keep the mortgage, when the money is cheap and the pendulum swings to rock bottom interest rates, you will be foolish not to refinance. All homeowners should take advantage of lower interest rate while keeping the original mortgage loan payoff schedule. Three, utilization of investments. Homeowners, once the mortgage is paid off, you can sit down and plan how to spend those funds. And one way is to invest in safe investments. Yes, your home loan could be a risky investment. There's always the possibility of housing prices dropping and the house being worthless. This really happens. However, the possibility is still there. Homeowners, if the money needs a place to go, then there's an opportunity for you to invest in a higher risk market. There's where you take the time to research and decide if you want to take a chance in this direction. Find a financial advisor about long and short term investing once your mortgage is going to be paid off to get advice. Get advice that pertains to your now unique situation and projected goals on how much you will have available to spend monthly. Just a little about me. I'm a person who enjoys food. However, cherry cheesecake is one of my favorite foods. Just to let you know, I am not a real estate agent, accountant, lawyer, or loan officer. Please let me know if you like this video by clicking a thumbs up, subscribing, or leaving comments. This video is just to give you bits of information on why a 30-year mortgage is a good way to go as you plan your future. The rest of the video will highlight 4, additional cash flow for the household. 5, stop paying private mortgage insurance. And 6, convert home equity into cash. Number 4, additional cash flow for the household. Homeowners, yes, homeowners need extra cash on hand for emergencies. Also, as the children grow up, parents want their children to participate in sports or any events that can keep them busy. These extracurricular activities do cost money if families want their children to participate. Just knowing the biggest loan repayment plan is paid off, releasing you as a homeowner from stressing to get the mortgage paid monthly. Number 5, stop paying private mortgage insurance. For homeowners, a percentage of the mortgage loan payment is spent on private mortgage insurance. PMI is paid by the homeowners until 20% of the equity of the home is reached. Right now, you as a homeowner can check to see if you have reached that 20% equity to get the amount removed from your monthly payment. If so, you can utilize that money on other expenses that support the household. PMI offers no benefits to homeowners. PMI only offers benefits to the lender if you default on a mortgage loan. Many homeowners forget to check on a PMI payment deduction and end up paying for this feature during their entire loan period. So please check to see if you met your 20% equity requirement and put that money back in your pocket. Number 6, convert your home equity into cash. Homeowners, now that you have paid off your home, you can utilize your home to get loans utilizing the equity you have built up on your home over the years. The equity allows you to open a credit line. This credit line is good to pay for emergencies, redecorate, or just utilize the fund to pay for some of your children's college costs or wedding. The funds will be available to use when you need them. These funds may also allow you to invest in another property, like a small vacation home or a down payment on a home for your children. Please let me know if you like this video by clicking a thumbs up, subscribing, or leaving a comment below. My name is Brenda Hayward, and thanks for your time.